Private banking is an extension of banking for consumers, except that it caters to high and ultra-high net worth individuals. For this category of consumer, banks introduce a specialty layer to cater to their specific needs. The products and services they offer include banking and cash management, estate and trust planning, tax planning, investment management, credit strategies, and philanthropic advice. And all services are provided by a dedicated private banker who will then manage the team of people that may be required to help the client, depending on which products and services they need. Let's look at each of these products and services in more detail. The banking and cash management products offered through private banking mirror those found for retail banking, checking and savings accounts, as well as debit and credit cards. The difference relates to the fees paid and the level of service received. Where in retail banking there are account maintenance fees and transaction fees, in private banking only one fee is paid monthly. This fee covers, among other things, multiple accounts and cards, including any transactions for services used, including ATM transactions, wire transfers, and other money transfer services. There are also special lower rates offered for any foreign exchange transactions. The monthly fee ranges anywhere from $75 to $150, depending on the level of service required and the amount of money the bank manages for the client. The higher the amount managed by the bank, the lower the fee. The dedicated private banker differs from retail banking in that the banker will only manage a handful of clients to ensure that they can provide bespoke one-on-one service. They get to know the client well so that they're able to recommend the right banking and cash management products for them. The private banker will also connect the client with an estate and trust planning consultant that works within the overall private banking team. This consultant provides specialized will, estate, and succession planning advice from a legal perspective, tailored to meet the client's personal objectives. They will also help administer, settle, and manage estates and trusts as executors, trustees, or agents. There is no extra cost for the provision of the advisory service. It's built into the monthly fee paid. This is because the value of the banking relationship is worth the limited amount of time it will take to set up the service. And if the client does choose to use the bank's resources for estate and trust administration, then a fee will be charged commensurate with the service required. Tax planning is another no-fee service provided through private banking. A tax consultant will work with the client to look at strategies that will help maximize cash flow while reducing taxes, and also to look at how to transfer wealth in the most tax-efficient manner to the next generation. And for those high net worth clients who are also business owners, this will extend to succession planning for their business. There's no extra cost for the provision of this advisory service. It's built into the monthly fee paid. The bank can expect that the income it will earn on the various investment and credit products the client may take advantage of in order to minimize their tax burden will more than cover the cost of providing this service. From an investment management perspective, the private banker will work closely with a portfolio manager as part of the overall private banking team. This portfolio manager will help the client to invest in a variety of products depending on the client's risk tolerance and overall financial goals. They'll seek ways to preserve capital while seeking opportunity for growth. If the client is more risk-averse, then they'll likely stay with blue-chip investing in proven mature companies that generate consistent dividends or have the highest bond ratings. Where a client has a higher tolerance for risk, the portfolio manager may direct him or her to more specialty equity products. The fees paid for investment management vary from one bank to another, but a client can expect to pay an annual fee of around 1.25 to 1.5% on their first million of assets under management, with the fees lowering to less than 0.5% for any remaining assets over 5 million. One might think that someone that is of a high net worth wouldn't need credit advice as they wouldn't have any credit needs. However, credit is often used as part of a tax minimization strategy, and also it's used as part of an investment management strategy. For example, a high net worth individual may look to having a customized line of credit that will provide immediate liquidity to allow them to quickly take advantage of investment opportunities. The way the credit is structured can help to reduce the tax burden of the investment. The credit solutions offered within private banking include lower rates than those offered to regular retail clients. The final advisory service that most private banks offer relates to philanthropy. Most high net worth clients will want to leave a legacy beyond transferring their wealth to the next generation. Private banking will offer philanthropic advisory services to help their clients provide charitable grants or awards. These awards, grants, and donations may be for a short-term basis, or they could be related to providing for a long-term endowment fund. There's no fee for the provision of the advice. Any fees charged are relevant to the management of the philanthropic fund that a client may set up. These fees don't go directly to the bank, but rather to the foundation where the client places their assets for disbursement. However, the foundation is usually managed or provided through an associated company to the bank. The greater benefit is to provide a value-added service to the high net worth client in order to ensure their full spectrum of financial planning needs are met.